And we're back, episode 5 of ETH Call. I have some exciting news. We are working on a fun intro hype video with the name ETH Call. So hopefully by the next episode or the one after that, we'll have a cool intro video for you guys to check out. But we have a few cool topics to check out today, so let's dive in. So the Shapella upgrade was a success. Ethereum is now fully migrated to proof of stake. You can now stake your assets and then you can withdraw them. It looks like the withdrawal queue is a little over 2 weeks, maybe about 18 days now, but we'll jump into that in just a minute. But Chandler, what are your first impressions?
I'm very stoked at how the withdrawals went. It basically went out with a near hitch. There were a few red blocks right after the merge that got some of the all core devs a little bit concerned, but that was quickly resolved fairly soon afterwards. There was a certain bug in one of the clients, but ultimately the withdrawals went out. We basically got shipped without a hitch.
Yeah, it was about what, 6 or 7 months since the merge happened. Is that right? So pretty quick.
It was pretty quick, and I think the concept around having the merge and withdrawals being separated caused quite a lot of controversy in the beginning. It was quite an easy point for the Bitcoin maxis, the proof of work maxis to jump on, and we ultimately gotten to the point where the merge is now finalized and withdrawals are enabled.
So we had a bet 2 weeks ago. I think, correct me if I'm wrong, Chandler, but I predicted price would drop somewhere between 10 to 20%. I did a middle curve, if you guys are familiar with that meme. And Chandler, you said price would be flat. Is that right?
Yeah, we
So
were both wrong.
We were both wrong, but you were certainly more right. So yeah, if you scroll down here, this is rated.network. We looked at this and talked about this a couple weeks ago. The withdrawal queue length is about 18 and a half days. A lot of this comes from Kraken. If you look at this chart here, you can see 61% of withdrawals are from Kraken. If you're unfamiliar, the SEC mandated that Kraken basically force unstake any US user from their ETH staking product because I believe they said it was a security or violated the SEC's rules in some capacity. And so 61% of all withdrawals are forced. The other percentage, you can see, are pretty small, actually. So pretty much anyone with an LSD, like you can see Rocket Pool and Coinbase, pretty low withdrawals because, why would you have waited to withdraw when you could have sold or traded the LSD? So overall, I would say this is a very bullish outcome. And I mean, certainly the market agrees. ETH is now over $2,000, probably over $2,100. I'll just check that really quickly to confirm. But the market is happy, seemingly. I mean, who knows if it's because of the successful upgrade, but all of that potential sell pressure seemed to be a nothing burger. So overall, pretty solid news. What are your thoughts there, Chandler?
Yeah, I predicted flat movement. The fact that we've gone up, I think, is somewhat tied to a larger pump within the crypto ecosystem in more of a larger setting. But I will take that slight win. I'm very stoked at the fact that a huge amount of ETH that is being unlocked is not putting too much pressure.
Yeah, you can see, just pulling up ETH BTC here, ETH sold off relative to BTC leading into the upgrade. And then you can see, I mean, again, who knows if the reason is that the sell pressure wasn't as strong as people thought. Who knows if this is just the market being happy that another upgrade went through. Obviously, we have no clue, but it is interesting. And I mean, for me personally, exciting that Ethereum has sort of caught up to where it's been over the last, about average over the last couple of years, has sort of been at this 0.07 area here, which I think is a testament to ETH's strength in the bear market to see ETH hold up so well. I know a lot of folks are calling for this to break down and for us to see a repeat of 2019. It's very well possible. I personally don't see it. I think all fundamental developments in crypto favor ETH versus BTC. I certainly am biased there, but it's nice to see ETH recover a little bit. I also wanted to share this Parsec dashboard and maybe talk through it a little bit. I will link this below, as with everything else, of course. I think this is one of the best dashboards at looking at ETH staking inflows and outflows. I was watching this as the upgrade went live and then, the coming hours after it went live just to see what the outflows and inflows looked like. It's actually really interesting. You can see they also have charted the staked Ether discount and the CB ETH discount. with staked ETH, Lido won't have withdrawals for I think at least another month, if that's right, Chandler. And then Coinbase ETH, you can withdraw on Coinbase now, but the withdrawal process takes about I think 18 to 20 days as of today. So it is still trading at a fairly small discount, I think 0.6 or so percent off, whereas Lido staked ETH is a very, very small discount. But really interesting to see the validator flows. You can see the validators awaiting exit is fairly flat after Kraken has pretty much all but queued up here. So yeah, any other thoughts here on this dashboard, Chandler?
Yeah, a flat withdrawal period straight after the merge was somewhat of a personally, that was somewhat of a surprise. I figured that the fact that you would have some sort of large spike and then a leveling off and then a decline soon after that. Maybe it's slightly too soon to say, but ultimately that kind of flat part of the curve, I think, was always going to be expected. The data point that I found fascinating, kind of more interesting, and it's the top left metric that you have over there, is the staking flows. How we saw, leading up to the merge, there weren't really too much more. There wasn't too much more ETH being deposited, which is to be expected. And then, as soon as withdrawals were enabled, we started seeing a fairly large inflow and outflow. The outflow was expected, but there was a significant amount of inflow as well. And I think from leading up to a couple of those large spikes that we see, roughly around like a few days after the merge, after the withdrawal was enabled, we're actually seeing net positive inflows. Members of the community that have ETH that want to kind of be a solo staker, or aren't too concerned with locking up ETH for some determined period of time. They initially had some concerns around that time lockup. Those kind of time lockup concerns are now taken away, and so ultimately they'd feel like adding more ETH into the ecosystem might make more sense.
This is pretty much as intense as it's going to get, I think, for withdrawals, unless there's some sort of flash crash and folks panic and want to exit their validators to sell in the future. I don't think with Lido staked ETH it's going to trigger large outflows, just because we didn't see it with Coinbase, and Coinbase was trading at a much bigger discount than Lido's staked ETH and has a much higher fee set of 25% versus 10%. And then for the other LSD products that had withdrawals, we didn't really see large withdrawals come out. So I think this is pretty much it. And I think we're going to see, fewer and fewer withdrawals and more deposits, which is exciting. And I think plays into what we talked about, I believe it was last week. So if you haven't seen that episode where we talked about, in quotes, the perils of restaking and LSDs, you should check that out, because I think that thesis will probably be validated over the next year, but obviously something we'll look out for. And next up, we wanted to talk about TVL on layer 2s. So I will pull this up. This tweet, I guess, was a little bit viral, or was pretty popular. But you can see here that L2Beat, which we'll go to that website in just a bit, was tracking the TVL of all L2 solutions. And they're saying it has passed 10 billion here. I think we're going to push back on that number a little bit, just because it doesn't really pass the sanity check. And I think they're double counting some tokens here and there. But I think it's still a credit to the layer 2 ecosystem, and is really showing you that the L2s are really gaining adoption and certainly beating out the competition of all layer 1s, at least for now. So I will pull up that L2Beat website here. You can see they're advertising or showcasing about 10.3 billion in TVL on these layer 2s. The vast majority of that is Arbitrum and Optimism, and then sort of the rest are the long tail. So Arbitrum and Optimism are about 86% of TVL. But where the numbers are a little bit weird here is if you look at Arbitrum's TVL, it's about 7 billion, and Optimism is a little over 2. But I think, and we did a little cross comparison with DeFi Llama, I think those numbers count the value of the tokens. So they're counting the value of the tokens, and they're obviously counting the price appreciation that we've seen just over the last week. It's not necessarily new money coming in, but it's those assets and those long tail altcoins on these layer 2s going up in price. And to showcase that a bit, I'll pull up DeFi Llama here. We can look at Ethereum's obviously number 1 for TVL, and then you can see the layer 2s here. And they're actually saying that Arbitrum only has 2.28 billion versus the 6.8 or 6.9 billion on L2Beat. So still impressive, but yeah, what are your thoughts, Chandler? What do you think's going on here?
I think any sort of round number that is as big as 10 billion is worth celebrating. I remember when DeFi got to not even just like value locked in an L2, just DeFi in itself was 1 billion. And I'm kind of giving away my age here, but even the total market cap of crypto was less than 1 billion. And so the fact that we just on a layer two ecosystem have a TVL net worth of 10 billion is absolutely amazing. And I think that is something that we should just give our entire industry a round of applause for, because that's great. And it's something that's worth celebrating, and we can take the wins. Do I agree with you that it's, a genuine increase in the value that's being created? I don't. I think, just adding your own token really pumps those numbers up. I think a lot of the value that we're attributing here is also a function of the fact that prices have increased. So the tokens that are being used in these DeFi platforms have naturally appreciated as well. And so conceptually, I think, this little market pump has increased the number to that over that $10 billion. Yeah. But I mean, token prices are a value, and people can exit that value, which means it's still value nonetheless. And so, my summary here is that it's great to just have something where we've crossed a big milestone.
Yeah, I think that's right. I think also, I'm seeing now that DeFi Llama naturally does not include staking, pool twos, and borrows in TVL. You can argue whether that's right or wrong. You can toggle it, which is cool. And that probably makes up a share of the difference too for the L2 beat report and DeFi Llamas. But you did make a good point. So at the end of 2020, I'm just scrolling through it here for those just listening, but you can see in November of 2020, total TVL for all of DeFi was 10 billion. And now that's just the layer two ecosystems and these scaling solutions. So you're right. It is a huge milestone. I'm probably underselling it. And I know a lot of people are calling for a sort of L2 season. So maybe we had, alt layer one season before. Maybe it's time for L2 season. I don't really see that type of speculation coming back just yet, but I'm certainly open to it. There's going to be incentives, and it's going to draw people to those networks. And Chandler, I was going to say, I know, so I've, quote unquote, famously sold my Arbitrum airdrop when I first got it at about $1.40. I think I sold it the first day or two or something like that. And you did not. You held on to it, and now you're doing well for yourself. So the price is now looks like $1.63. What are your thoughts here? You're still just gonna have you even claimed it, or are you just holding this for the long run?
I have claimed, yes, and I would love to say that I had the magical foresight to know that Arbitrum prices would increase. I did not. I won by sheer dumb luck of not selling, and ultimately that was like all I actually really ended up doing. Funny enough, actually, to kind of add more to the story, I actually never even sold my Optimism airdrop, and that also worked out for me in the end as well. I think the net increase from what the token value was worth initially at the drop to kind of that first initial dump to where it is now has actually worked out for me as well. I will also caveat this by saying that I don't sell these tokens for the concept of I really truly believe in the value of the token. Very specifically the token, not the project in itself. I think Arbitrum and Optimism are absolutely amazing projects that will scale the entire Ethereum ecosystem. But the token value, I think there's always going to be a disjoint between token value and ultimately what those tokens are worth in those L2s.
Yeah, I while you were talking about that, I was reminded of this tweet that I shared in our company Slack, and I think it's absolutely hilarious. It's from DGen Spartan, and he's talking about like how a non-meme coin and a meme coin differ in how the market prices them. And you can see that for a meme coin and a non-meme coin, the narrative slash speculation aspect is like still 99% of what goes into the price for a non-meme coin, which you could argue in this case is Arbitrum, Optimism, etc. That the fundamentals are such a small piece of it, and it's all just narrative and speculation. I think this is certainly a comical exaggeration, but it is kind of true in a way, right? Like there's no conceivable value that's going to be driven to the ARB token in the next several years, right? Like the sequencer revenue we've talked about is basically de minimis. It would not in any way justify the $16 billion FDV that Arbitrum has now. So I don't know. This is probably the middle IQ take that I always find myself falling into. But we'll see what happens. I just find this tweet extremely funny and pretty spot on in some ways.
Yeah, this tweet actually summarizes the entire industry in so much of a poetic, simple way that I find it really hilarious to think about. And you're totally right.
Cool. Well, I think it's time we move on to the next topic. And I think this was sort of buried in the news just because the Shapella upgrade went over without a hitch, and people are excited about that naturally. But this is pretty big news. So during the bankruptcy process, FTX has already recovered 7.3 billion in assets. I think this is about 85 or so percent of all assets that were, quote unquote, lost or stolen. So pretty exciting news. I think it's only been, let's see, about 6 months if FTX collapsed last November. And they've done a successful job in clawing back a lot of these funds that were sort of given or wandered away, which is quite impressive. And I think it's great news for all of the creditors. What are your thoughts, Chandler? This has to be, a good tailwind for the industry if we recover more and more funds and get them back into the hands of users, right?
Totally agree, and I also have to take my hat off to the team that's orchestrating this and the recovery around these funds. It actually kind of baffles me that they could find 7.3 billion of that total amount, especially considering that we knew that the whole structure of how FTX worked was just smoke and mirrors. And so the fact that there is even 7.3 to recover is something is a number that I don't think many people expected to see.
Yeah. So the last I heard, people or creditors will receive payment or back in dollar terms, which makes sense to me because I think the logistics of the new FTX company returning tokens to, addresses and coordinating that, and then, rebuying assets that were sold and selling assets that were bought seems not workable. So I think there was, last I heard, there was a dollar snapshot at the time of bankruptcy or, just before. Correct me if you're a creditor and you've heard differently, but as far as I know, that's how it goes. And we actually saw the Wall Street Journal break this article that John J. Ray, who's handling the bankruptcy of FTX, is interested in rebooting the exchange and that the exchange could restart. What are your thoughts here, Chandler?
I wonder if it's just one of those kind of entities that need to be restarted in a different way. I think from a leadership perspective, the FTX team's kind of like sour apples have gone, but they still had a team of around 400 people. I think not every single one of the people in that team are terrible. It's questionable whether the tech is even worth salvaging. I mean, the thing that made FTX kind of valuable to most people is that it was super fast and a super efficient exchange. But I mean, if you don't have a very cumbersome back end that's checking all the kind of data that needs to be checked when you're making trades to make sure that everything works and it's one trade is being offset by another trade, and that there's actual liquidity there, not just fake liquidity, then it makes sense that kind of FTX was super fast. And so I'm still doubtful that the tech is even worthwhile saving, and I don't know too many people that would jump back into FTX if they've already known that their money's been lost before. And so it's one of those age-old questions, right? Like, does lightning strike the same place twice? Do you think FTX will ever be as terrible as it was before? I don't think so. But I mean, once something has a bad name and a bad reputation, it has a natural aversion for most people. So I think the restart might not be ideal.
Yeah, I kind of I don't know. I disagree and agree in some ways. So I think when Silicon Valley Bank collapsed, there was like this whole narrative going around that now Silicon Valley Bank was actually the safest bank because all deposits were guaranteed by the government. I sort of think that's true with FTX, right? Like FTX, if it was rebooted, I think there would be proper oversight there and it would be a safe exchange. I personally wouldn't use it because Americans couldn't use, the real version of FTX anyway, so it's not really relevant to me. But I think there could be something there. I've heard the tech is pretty solid. I've heard that they had this very innovative matching engine for orders and trades. But I was listening to the chopping block and they brought up a great point that it's sort of doing a disservice to all of the creditors. If they're sinking money into rebooting this exchange, presumably they have to hire new people, they have to do some upgrades to the tech, they have to relaunch, market, etc. All of that is money that could have been returned to creditors that they're now investing in this new exchange. And, presumably the exchange would be profitable in the future. Who knows? But now the creditors are basically like forced to take a bet on if this exchange could work out. So I'm mixed. I think the creditors should get as much money back as possible. And after that process is done, maybe if after creditors reach a threshold like 90% return or something like that, they could consider restarting it because there probably is something there. But again, I think it shouldn't be the priority.
FTX can just rebrand into any other, building that
True.
tech out into any other name brand that's got someone credible behind it. Makes sense. And I think I've yet to find
who
a
would that be?
CEO. Yeah.
Who would the credible person that could bring this exchange to market be? I mean, Coinbase can't do it because FTX is offshore. They're doing like
I mean, they're already
perpetuals
doing it, right? Coinbase is already doing it. They're offering the products. The reason why it's not as big as FTX is because they did it right.
Well, they're not offering the perpetuals products, right? So everyone on FTX loved the high leverage, and FTX was also willing to. I'm not actually sure about 100% sure, but I think they were much more loose in their standards for listing. Whereas like Coinbase has this weird listing problem because anything that might be a security they can't list, and all of the good tokens, quote unquote, might be a security, and all of the quote unquote bad tokens like Shiba Inu and all these junk tokens that are clearly not securities because they genuinely have no value they're listing. So yeah, I wish Coinbase could get in this space, but I think we need more clear regulation for that. Cool. Well, I think we can close off with this last topic that I know you wanted to chat about. So Justin Drake was on a podcast. He's a researcher at the Ethereum Foundation. For those that don't know, he's pretty prolific in this space. And he predicted that solo stakers may get airdrops. I'm a little skeptical about this because it's hard to tell who's a solo staker. Like should a Rocket Pool node operator get this airdrop? Should they not? How do you tell who's a solo staker, who's running hundreds and hundreds of validators? But pretty cool. A good way to incentivize ETH staking and solo staking to decentralize the network. Any closing thoughts there, Chandler?
Yeah, I think the concept of incentivizing stakers and the myriad of different types of incentivization mechanisms that we're experimenting with in crypto right now is kind of where the basis of this is coming from. And so my take here is with we've chatted about it in a previous episode, but the restaking primitives around eigenlayer and what's happening there, I think is an incentivization mechanism that I think people are very interested in, and we'll definitely talk about that more in future episodes. The other way that I'm thinking that this is leading towards is, and something that's been spoken about a lot recently, is a retroactive public goods funding, and how that's being funneled into people that actually end up just doing good work in the space without the need or want for a reward, and actually get rewarded later down the line. I think that's something that I think will tie into this, and whether that becomes an airdrop or whatever it is. And then I think the third one, and this is kind of a little bit more like wishy-washy, is that figuring out how to incentivize that good behavior is where I think a lot of the people are spending a lot of time researching and looking into. And ultimately, if you look at a little bit more detail on what that article is saying, it's saying that there's a lot of data being analyzed around what is a good staker and what is not a good staker, and figuring out metrics on how to rate stakers. And I think that that's something that's kind of interesting. And so I don't personally think that this is necessarily airdrops. I think that this is more of just the concept around finding who are good stakers and finding incentive mechanisms around them, and ultimately funneling some of those rewards to those stakers.
Well, I appreciate the closing thoughts, and I think that's something we can all aspire to, is helping incentivize people to do the right things with the Ethereum network. But with that, we'll close things out. Episode 5 of ETH Call is in the books, and expect a snappy intro video either on the next episode, episode 6, or the one after that. So make sure to stay tuned to see that. Thanks, everyone, for listening. Bye, everybody.